There are exactly 3 times you should ever sell Bitcoin, not dozens, not whenever the market feels right. 3. And if you're over 40, this might be the most important distinction you'll ever learn. The difference between selling for profit and selling for utility. One keeps you trapped in a trader's mindset, endlessly trying to time markets you can't predict. The other turns Bitcoin into what it was always meant to be, a wealth management tool that works for you, not a casino chip you're hoping appreciates. By the end of this video, you'll have a framework that removes 99% of the emotional noise around selling. And you'll understand why the wealthiest holders almost never sell at all. Let's start with the scenario most investors get catastrophically wrong. Here's the only emergency that justifies selling Bitcoin. You need money now, and you have no other options. Medical emergency. Job loss. Genuine financial crisis that can't wait and can't be solved any other way. Notice what's not on that list. The market looks shaky. I want to buy back lower. Everyone's saying we're due for a correction. Those aren't emergencies. Those are fear dressed up as strategy. But here's what most people miss. Even in a real crisis, you should never sell everything. You sell the minimum required to solve the immediate problem, nothing more. Why? Because the moment you sell, you've locked in your position at whatever price the market gives you. You've converted scarcity into dollars that lose value every year. You've traded the only provably finite asset for infinite fiat. That's not strategy. That's surrender. Smart holders plan around this scenario before it happens. They keep an emergency fund in traditional savings. They maintain credit lines. They structure their lives so Bitcoin is never the first line of defense. It's the last resort they protect at all costs. Here's the brutal truth. If you're forced to sell Bitcoin to cover monthly expenses, you weren't positioned correctly to own it in the first place. This isn't about blame, it's about reality. Bitcoin is a long-term treasury asset, not a checking account. But what if it's not an emergency? What if you actually want to use the wealth you've built? That's when reason 2 becomes critical. There's a specific type of transaction that justifies converting Bitcoin to dollars. Buying an asset that fundamentally changes your quality of life. A home, property, a business, something that creates value, generates income, or eliminates a major expense. Not a car, not a vacation, not treating yourself because you're up 50%. Here's the framework. If the purchase doesn't produce cash flow, reduce your cost of living, or create equity you can leverage later, you're not buying an asset. You're buying a liability with Bitcoin you'll never get back. Think about this carefully. You're over 40. You don't have unlimited time to rebuild positions you sell. Every Bitcoin you convert to consumption is gone. The person who bought at $500 and sold at $50,000 to buy a luxury car, they spent 1 Bitcoin. The person who held and borrowed against it at low rates, often around 4 to 6% interest, depending on the platform and market conditions, they kept the Bitcoin and still got the car. Rates can vary, so check current options and consider the risks involved. That's the difference between selling for utility and selling for profit. One is strategic wealth management, the other is expensive celebration. Now here's where it gets interesting. Most investors think the point of holding Bitcoin is eventually selling it for more dollars. That's backwards. The point of holding Bitcoin is never selling it at all. You accumulate, you hold. And when you need liquidity, you borrow against it. The Bitcoin stays in your possession, growing in value. You access the cash without triggering taxes. You pay back the loan with devalued currency. You win 3 ways. But there's one scenario where selling actually makes sense even if you don't need the money. And it's the one almost no one talks about. This is the most sophisticated reason to sell, and the one that separates strategic holders from ideologues. You're not selling because you think Bitcoin is done. You're selling because your life stage requires a different allocation. You're 55, you're 60, you're approaching retirement. And the volatility that didn't bother you at 40 is now a legitimate risk to your plans. Here's what smart wealth managers understand. A 30-year-old can hold 100% Bitcoin and sleep fine through 80% drawdowns. They have decades to recover. A 62-year-old who needs that money in 3 years? That's not conviction. That's gambling with your retirement. So you rebalance. Not out of fear. Not because you stopped believing in scarcity, because your personal risk tolerance and time horizon have changed. You move 20%, maybe 30% into bonds, dividend stocks, real estate, things that produce income and won't lose half their value the year you need them. But here's the critical distinction. You're not selling Bitcoin to chase other investments. You're not selling because you think stocks will outperform. You're selling to match your portfolio to your life stage. That's not weakness, that's wisdom. And even then, you never sell the core position. Remember the 20% rule from earlier? That bottom portion you've designated as generational wealth? The part you'll borrow against but never convert? That stays untouched, always. Most people never think about this because they're still treating Bitcoin like a trade instead of a component of a diversified wealth strategy. They're all in or all out. That's how you end up with regret, no matter what the price does. The professionals? They think in percentages, time horizons, and risk-adjusted returns. They sell tactically when their situation requires it, but they never sell emotionally, which brings us to what you should do instead of selling. Here's what changes everything. In almost every scenario where you think you need to sell, there's a better option. You need liquidity? Borrow against your Bitcoin at low rates, often around 4 to 6% interest, through platforms designed for this exact purpose. You keep your stack, you avoid taxes, you maintain your upside. The only cost is low interest on money you're accessing anyway. You want to diversify? Sell a percentage, not the whole position. Trim systematically over time instead of making one emotional decision you can't reverse. You're worried about volatility? That's not a reason to sell. That's a reason to check your position size. If you can't sleep at night, you own too much. The fix isn't selling everything, it's adjusting your allocation so you can hold comfortably through any market. You want to take profits? Ask yourself, profits in what? Dollars that lose purchasing power every year? You're not taking profits. You're exiting scarcity for inflation. That's not winning. That's just moving numbers around. Here's the mindset shift that defines sophisticated Bitcoin holders. They don't measure wealth in dollars anymore. They measure it in Bitcoin. The goal isn't to accumulate Bitcoin so you can sell it for dollars. The goal is to accumulate Bitcoin because it is the savings technology. Everything else is just temporary liquidity you access when necessary. Michael Saylor doesn't have an exit price. Some sovereign wealth funds aren't planning to sell at $200,000. They're planning to hold forever and use it as collateral. Because they understand what most retail investors don't. The best investors never sell their best assets. So, what does this actually mean for you? 3 reasons to sell. That's it. 1. Genuine liquidity crisis you can't solve any other way, and even then, minimum required only. 2. Life-changing purchase that creates value, generates income, or fundamentally improves your quality of life. Not consumption, investment. 3. Rebalancing at a life milestone where your risk tolerance or time horizon has genuinely changed. Not fear, strategy. Everything else? Every other impulse to sell, every market dip that makes you nervous, every rally that makes you want to lock in gains? That's noise. That's the same emotional trading that's kept most investors mediocre for decades. You're over 40. You don't have time to get this wrong again. You don't have time to sell at $60,000, watch it hit $150,000, and spend the next 3 years wondering if you should buy back in. Keep in mind, markets can change rapidly, so always do your own research. You don't have time to mistake volatility for risk and exit the only scarce digital asset that exists. What you have time for is building a position so intelligently structured, so systematically accumulated, so strategically held that selling becomes the exception, not the rule. You have time to treat Bitcoin like the treasury asset it is. You have time to graduate from investor to holder. This is the framework. 3 reasons, no exceptions. This is how you stop trading and start building wealth. If this shifts how you think about Bitcoin, You're already ahead of most investors who are still playing the same losing game of trying to time tops and bottoms. Subscribe for more frameworks like this. No hype, no trading advice, just the strategic clarity that separates holders from gamblers. You didn't come here to sell Bitcoin. You came here to understand when selling actually makes sense. Now you know. Use it wisely.